Good afternoon, welcome to MEED Live. My name is Richard Thompson, I am the editor of MEED. We have a special edition of MEED Live today. We're going to look at Saudi Arabia and in particular look at the Saudi Arabian oil and gas and energy sector. Now we have the latest edition of MEED's research report on Saudi Arabia. This is Saudi Arabia delivering Vision 2030, and so a lot of the information we're going to talk about today comes from this report. But it's been a very big week in Saudi Arabia. US President Donald Trump was in the kingdom last weekend, and before we get into oil and gas and the outlook for projects in the energy sector, I think we need to look at the visit of the US President to Saudi Arabia and what it might mean. There was a huge amount of business and media activity that has come out from that. And joining the President in Riyadh was Andrew Roscoe, MEED's Power and Water editor. Andrew, you spent several days in the kingdom during the visit. What was it like? What was the atmosphere in Riyadh like?
Yeah, it was great. Lots of energy. I mean, it was quite short notice. 2 days before the event,
500 journalists or something.
2 days before the event, invited 500 journalists. So they were getting visas sorted out quickly, and yeah, they had from around the world print journalists, online journalists, and TV crews.
For the Saudi, I mean, my feeling is that Saudi Arabia saw this as quite an important moment to elevate their profile internationally, but also domestically. They had a lot of references to the 1945 Roosevelt speech backing Saudi Arabia and King Abdulaziz. So is that your sense that for Saudi this was a big deal?
Sure. I mean, all the way from the airport into the centre of Riyadh, there was pictures of Donald Trump beside King Salman, and then there was pictures of King Salman's father, King Abdulaziz, who was the first king of modern Saudi Arabia, with Roosevelt in 1945. So these, all the way into the centre of Riyadh. It's a long drive, and there were alternate Saudi and American flags on their way in. And yeah, it was a big visit, and I think, they were definitely pleased in Saudi Arabia that he's chosen, to visit Riyadh for his first official state trip.
I mean, for Saudi's been quite isolated regionally, hasn't it, since the Obama years, when the Americans shifted their focus to the Pacific. Sure. And the Saudis have seen Iran gaining status with the sanctions being lifted, and they've had wars in Yemen and Syria, so they've been isolated. Do you think this is sort of a statement of support from America?
Sure. Well, I think Khalid Al-Falih, the energy minister, he said a couple of times it's the new partnership for the 21st century, because the relations with Barack Obama were quite strained with Riyadh, and that, number of issues over the years. There was disagreements over the fall of Mubarak in Egypt, and also, the nuclear deal with Iran didn't go down well in Riyadh. So the relationships with Obama were sort of cordial at best.
And so the energy minister, Khalid Al-Falih, he described it as a partnership for the 21st century. What do you think he meant by that? Is this an economic partnership, a defence and security partnership?
I think it's encompassing everything. But I mean, Khalid Al-Falih played a key role at the event, being the energy minister, and that's obviously Saudi Arabia's made its wealth and it's developed on its oil revenues. But he's also leading sort of the transition in the energy sector as well towards renewables, towards improving efficiency. So he's got a key role in that, and I think the event can be divided into two. So the first day was all about business. There was, $350 billion worth of agreements signed, and the second day was about security. So
so $350 billion worth of agreements signed. That's over a 10-year spending window. Is that new deals? I mean, is this money that we already knew about and it was already planned, or is this new money or new deals?
A lot of it's new deals. You do have to be clear though that a lot of it's MOUs and MOIs. So, as you remember from the Egypt Development Conference a few years ago, MOUs don't,
a lot of it's about surrounding
contracts.
The two presidents or the two heads of state with good headlines, and it's kind of PR, isn't it?
But the business leaders and I've been speaking to in Riyadh and since I've come back, they're quite hopeful and optimistic, because even if 10% of the 350 billion comes to the market, that's 35 billion worth of projects, and they're sure there'll be more than that.
And broadly, before we go into the detail of the deals, I'm interested, does this mean, so we've had in Saudi Arabia and in the GCC, we've had a year and a half of austerity, fiscal consolidation, cutting spending, austerity programs, whilst the governments try and get on top of their fiscal position. Does this symbolise, this kind of announcement of these big deals, does this symbolise a turning point, do you think? Are we now moving from out of the period of austerity and now we can expect to see spending recover? What do you think?
I think in terms of a turning point, it's definitely, things are changing. And I guess the main point we can say things are changing is that it's private investment. A lot of these deals, so the arms deal, the one that everyone's talking about, that's going to be a Saudi-funded deal. But a lot of the other ones, it's not just, it's not like deals that have been signed in the past. And I think that was a key point that the ministers were trying to make. They had Jadaan, the finance minister, and the Minister of Commerce were all saying we're changing the way we do business with the West. It's no longer just about us paying them and them providing us with products or services. They need to invest, and they need to invest in local people as well.
Okay.
In terms of building manufacturing plants, creating jobs for locals, training locals. So I think it's certainly a training point. A turning point from that regard. The way that the relationship.
It's a new type of deal.
It's a new trading relationship. Okay. So I think that's as well what Al Falah's talking about. A new start with a new president, but also the start of a new way of doing business as well.
Now we're also joined this week by Mark Watts, Mead's oil and gas editor. Mark was one of the main authors of the Saudi report that I mentioned at the beginning of the show. Again, before we go on to the oil and gas market specifically, Mark, Donald Trump's visit to Saudi Arabia, and Andrew has mentioned that Khaled Al Fallah, the energy minister, was a prominent figure in that. Is there anything specifically for the Aramco market or the oil and gas market that we have learned from the visit?
Yeah, it's difficult from the deals that have been announced that have figures. It looks like about $45 billion of going towards the oil and gas sector and petrochemicals. And of these, a few, as Andrew said, are memorandums of understanding, and
so
a few.
This is with Dow Chemicals and
and which could come into fruition, could not. Some of them are spending over the next 10 years. So one of the unusual things that I've seen is that the deals side with oil services companies, with the American oil services companies, have these kind of figures attached to them, like $7 billion. Normally these deals are normally done sort of behind closed doors, and you never really see that level of detail. So there is definitely a kind of a push to show that something's being done and something's being spent, and it's very much like a show of, we're investing big now. I think a lot of the deals in terms of drilling and oil services are things that would have to be in place anyway for Aramco to meet its sort of 10-year targets. So I think, there is evidence of investment, but at the same time, I think these kind of companies were already going to pick up these kind of contracts. The bigger focus that I've seen is more on the drive towards investing in new infrastructure and facilities for Saudi to manufacture things for the oil and gas industry.
So this is the In-Kingdom Total Value program. Well, let's come back to that specific policy in a moment, because we have some slides that you have prepared on that. I want to keep it with the Trump visit at the moment. Did we learn anything about the IPO? So the Saudi Aramco IPO, the national oil company of Saudi Arabia, the intention is to float up to 5% of it on the Tadawul stock market in Riyadh and one or more international markets. And New York is obviously one of those. Did this visit clarify that at all?
From reading reports and speaking to people that were in Riyadh, it doesn't sound like the oil minister really added any extra detail to the Aramco.
Did you hear?
He was asked about it, and he said we can't really give you more information. They're still committed to it,
and they're aiming for 2018, which has been their line for a few months now. So, but in terms of which stock exchange will they be listed on, there's a lot of questions still to be answered on that level.
Now, one of the questions that has come in, and I do invite you to submit questions. You can send them in to us, and they will appear on my screen in front here, and we will try and answer them. One of the questions I mentioned, I referred to austerity program, or the past 18 months of austerity, and someone has asked us to define austerity. So for me, the austerity that I'm referring to, this is the fiscal consolidation exercise. With the fall in oil prices, we've seen government revenues fall, and spending has to be reined in. Otherwise, you end up with a growing deficit, a growing overspend. And so the austerity that I referred to is this fiscal consolidation, cutting back on spending to get in control. So I hope that answers that question. And so what I was wondering was, have we now, after 18 months, have the spending taps been turned back on again? And the other reason I asked that question is because, as well as the $350 billion of deals in Saudi, the IMF this week published a statement. They completed their Article 4 consultation with Saudi, and they said Saudi Arabia should relax some of its fiscal consolidation measures. If they cut spending too much, it will hit wider growth. And so there's that. And we also saw at the start of the month the increases in state salaries as well. So 3 different things, which to me suggest maybe we're coming back to spending in the region. But do you think that you talked about the new way of thinking?
Yeah.
You know, the deals aren't just buyer-seller deals; they're in return for investment and training and skills. But do you actually think we might see some spending again, particularly on projects?
Well, I think now from people I spoke to at the event. So I mean, on the first, it kicked off with a CEO forum, a Saudi-US CEO forum. So there's 80 CEOs from the States and from Saudi Arabia there, and they were all confident, happy with the deals. But yeah, the point's been made. A lot of them were MOUs, memorandum of understandings, and letters of intent rather than actual contracts.
What about the sectors? So
the defence deal, $110 billion. Yeah. I think that one's pretty good to go over the allocated period. I think a lot of them, might not. They've still got a bit of work to do before they come to fruition.
Do we know what the defence deal is for? I mean, is it particularly because of what's happening in Yemen or Syria at the moment, or is it about creating just a stronger military capability in the event of something happening in the future, or is it to export? What is the defence deal all about?
Well, I think they are committed in Yemen, so it will help bolster that. But also, a theme of the event as well was Iran is still, it's still seen as a big sort of ogre in Riyadh. So on the first evening, the foreign minister gave a press conference with Rex Tillerson, and he was quite clear about what he perceives as the dangers of Iran and what they are doing in the region, countries like Yemen, Syria. So I think bolster against Iran's a key part of that as well.
2 weeks ago, the Deputy Crown Prince Mohammed bin Salman, he appeared on national television and he gave a speech, and he talked about when the Aramco flotation happens, Saudi Arabia will earn $100 billion plus, 133 I think he said, and 50 to 100% of that will be reinvested inside the kingdom through the public investment fund, and it will go in strategic sectors, military is one of them, he said. So that's quite clear. We have the $110 billion deal, we have that statement.
Well, another thing about the defence deal was, remember in the 2030 vision, aiming for 50% of the defence stuff to come from within Saudi by 2030. So that's a big component of it as well. You're not just shoring up your own military capabilities, but also creating an industry there.
And they also talked about manufacturing Mohammed bin Salman talked about manufacturing, so I guess defence ties in with that as well.
Sure. So I think that's, creating industries within Saudi Arabia is a big part. But also, Al Fallah and some of the other ministers were keen to stress it wasn't just all one way. So another part of the investment, and that, they mentioned with the Aramco IPO, there'll be more money coming to the PIF, is looking at investing abroad as well. So they're looking at investments in the US and refineries and some other industries there as well. So they're looking to diversify internationally as well, which they highlighted when we've had the Aramco IPO, we'll have more capability to do that.
Now let's move on to Saudi Arabia more broadly. As I mentioned, MEED has published its latest research report on Saudi Arabia. So Saudi Arabia delivering Vision 2030. It's a big document. Mark and Andrew were two of the primary authors of this report. We touched on it in the last broadcast, looking at the infrastructure side and the non-oil side. So today we're going to look at oil and gas and the energy sector. If I can come to you, Mark, first to talk about the oil and and gas sector. Perhaps we could start by describing where we are. So broadly, this fiscal consolidation or austerity has seen the projects market in Saudi Arabia collapse in the past 12 months. 60% fall across all projects. But what's been the oil and gas project sector? I think we have a slide. If we can put Mark's slide on contract awards, 2016 contract awards up on screen. What has been the oil and gas project story for the 2016, and where are we today?
Yeah, so I think it's been a bit of a different story in the oil and gas sector than the overall Saudi economy. So overall construction projects have taken a dip, but actually over the last 2 or 3 years of lower oil prices, Saudi Arabia's spending on projects has been relatively consistent according to sort of MEED Project's data. So last year there was actually an increase in spending towards about $12 billion on EPC contracts. And there are big projects going forward that will drive spending in that sector. I think because Saudi Arabia is by far its largest source of government revenue is still the export of crude oil, that there's no way that they can limit spending on keeping its capacity going and keeping its production up to keep that revenue going. So it's a completely different consideration to the rest of the economy, I think.
Okay, and you reported on MEED.com recently, well, probably a month or two ago, that Aramco spent about $5 billion on their long-term offshore agreement. So these are maintenance and production maintenance agreements with 5 companies.
Yeah.
And you said that that program is going to be expanded possibly.
Yeah, so the start of 2016, or from the start of 2016, Aramco started awarding contract as part of a big offshore program called the Long-Term Agreement. 5 companies are currently eligible to bid for these contracts. And it does seem to have been quite successful in terms of generating work for contractors. As you said, it looks like about $5 billion worth have been awarded since the start of 2016. And the outlook for further work looks quite good, because it looks like Aramco is now talking to other companies to increase the amount of companies within that program, because they don't think that the companies that are currently in it will have enough capacity over the medium term to carry out the level of work that is required.
So $5 billion spent last year. So this is long-term agreements with 5 companies that are pre-qualified for a program of offshore projects, and that group of 5 were awarded contracts worth $5 billion last year in 2016. Do we know what the size of the overall project pipeline is, or the pot of projects that is within the scope of that long-term agreement?
Yeah, I mean, it hasn't really been revealed, and it seems that the contractors are informed about a lot of these projects quite soon before they're actually tendered.
Okay.
So there is talk at the moment of 2 large oil field developments at the Marjan and Zuluf fields, which could be sort of between $3 billion and $5 billion.
These are
each.
existing fields to be expanded.
Yeah, so either capacity increases or work to maintain capacity or modernise the facilities.
They're both worth about $5 billion.
Up to $5 billion.
And will they be placed as single contracts, or will they be split into?
That's something that's been discussed. I know that Aramco's been talking to the original 5 contractors about how they should go forward and how they should split the work up on these bigger kind of projects. Some of the focus on these 2 projects will be on increasing gas capacity. The gas will be piped back to onshore, and then it might also include onshore gas processing facilities. So that's another opportunities for different contractors on projects that are associated with these offshore field developments. So you could be looking at billions of dollars worth of investment in gas processing capacity. So potentially these projects could be big drivers of investment.
What do we know about when we might see contract awards on those 2 schemes?
Yeah, so I think Marjan will be the first one, and that could be towards the end of this year or early next year. Still very much up in the air, depending on how it's split up, and the timeline is not completely clear, as always, but perhaps one at the end of this year, early next year, and then one sometime maybe towards the end of next year, halfway through next year. So if these go ahead as planned, we'll see sort of consistent, large, multi-package sort of mega projects perhaps
Okay.
going on
So that's
offshore.
two big mega projects, $3 to $5 billion estimated value for each of those field developments towards the end of the year, early next year for placement. You've also reported that currently there's about $800 million worth of contracts out to tender on the long-term agreement program that have yet to be awarded.
Yeah, these are the kind of contracts that they've been awarded so far. So over a dozen contracts have been awarded so far. Some of them are smaller, say like $200-300 million contracts to install facilities at like at oil wells and different install new platforms. So they're not sort of like traditional field developments, but more like modifications and upgrades on existing facilities. So the ones that are out to tender at the moment are more in this kind of area.
So it's about maintaining output and
replacing pipelines, replacing platforms,
wellhead,
that kind of thing.
And so we have the five. What we're talking about here is one part of Aramco's operations. It's the offshore maintenance and capacity maintenance program. We have 5 contractors under this program, and we think Aramco wants to increase the number of contractors on that program. What news do we have on that? Do we know if they're tendering for additional companies on there?
Yeah, I mean that's something I'm working on. I'm sort of looking into at the moment. I know that Aramco have had meetings with specific contractors, either at their Gulf kind of headquarters or back in the home countries. So it's possible that they might add the new contractors that they add. Some of them might work in a kind of a junior partner capacity, where they might help out the bigger contractors with existing work. Some might be brought in as new sort of large contractors and pick up some of the bigger.
And where does this sit within the overall Aramco structure? What operating division, do you know which operating division of Aramco is this? Aramco offshore or how is that structured?
Yeah, I'm not exactly sure how it works sort of internally within Aramco and whether it's a separate division.
Okay, then moving away from the long-term agreement, so that's one specific category of project work with Aramco. That's the long-term offshore agreements. Aramco has something like an investment program of about $330 billion over 10 years. That's $33 billion a year. This is capital projects and investments, is it? Or this is everything?
This is everything, yeah.
So that's operational.
So we're not just talking about EPC contract here, we're talking about, if you break that down, you're talking about $30 billion a year, which is enormous.
If we can, Mark has a slide for this as well, which is called the engine of the economy. If we could put that slide up on screen as well, please. So $334 billion over the next 10 years, covering all types of work, EPC or O&M, whatever. 42% on drilling, you have said.
Yeah, so this comes from a conference in Bahrain I went to, and I think it's the third quarter of last year, where an official from Aramco sort of broke down this program, what they would spend it on. So about 42% on drilling. A lot of that is the kind of contracts that we've seen announced during this Trump visit, and it's also the kind of contracts that are awarded to people like Schlumberger, Halliburton, and the kind of deals that never really get publicly announced, and certainly
oil services contracts.
Yeah, and these kind of companies will be doing a lot of the work in Saudi Arabia over the next decade, and that's separate to the big EPC contracts that that we were just talking about. So this is constantly happening. It's one of the world's largest oil producers. It has to spend this money just annually just to maintain.
So
that level
do we
of
know?
work.
So 33 billion a year is how it would break down in the next 10 years. How does that compare with the past 10 years? Do we have any insight into if this is a step up or a step down, or just the continuing what we've seen?
It's difficult to say because that capex, that sort of total capex figure, is not normally revealed or broken down. So it seems like a figure that would be good news if you were looking to pick up work in Saudi Arabia. If you're talking about a third of that being in infrastructure projects, oil field developments, refineries, etc. So a third of that would be over $10 billion a year. It seems in line with what they've been spending in recent years.
So it's in line with what we've been spending. We're not seeing an austerity program, but we're not seeing a splurge, a huge sort of investment drive either.
It's quite difficult to quantify what that figure means in terms of whether we'll see a pickup in EPC contracts. I think out of all the GCC countries, since the oil prices fell 2014, Saudi Arabia has been the most consistent spender, not big jumps or just maintaining a certain level of spending.
And what do we know about the sort of services or supplies or that Aramco is looking for? I mean, we hear a lot, for example, of talk about. In fact, we did a webinar last week with GE talking about the digitalization of industrial facilities, and they talked about Rasgas and the digitization of the liquefaction trains at the LNG terminals there. Are we seeing a shift from traditional kind of concrete and steel structures into digital investments, or is it upstream oil service? Where's the money going to be spent, do you think?
I think the shift towards digitalization and integrating, cutting edge technology into oil field works is an ongoing thing. I think I can't say whether or not Aramco's spending on that has vastly increased, or whether that's going to become more of a focus.
I mean, I think they have a huge amount of investment internally on digital anyway, and they have their data centres and reservoir management centres, etc.
But in terms of the actual work that's going into the production, a lot of this is still going to be the physical equipment and facilities that are needed to.
And what project news do we have at the moment before we get on to the in-kingdom total value, which you mentioned earlier? Actually, before you say that, we have a question here. Somebody has asked about, are the slides available? Yes, they are available, and you should be able to get them now. In front of you on the screen, you can see a button called Resources. If you click on that, that should take you to the file with the slides. So the slides are available, and you can access them right now by going onto that Resources tab. If you have any problems, submit another question and we will try and explain a bit more clearly. Before we move on to Andrew and onto the renewables sector and the energy sector, you mentioned we have a slide, if we could get it on screen, called In-Kingdom Total Value Ad Programme. Now, you mentioned when we were talking about Donald Trump's visit that this is a big part, and actually, Andrew, you mentioned it as well, this is a big part of the Saudi agenda for people to buy services and products locally and to employ locals.
Yeah.
So you're saying that this is important for Aramco?
There's certainly a common theme in the announcements around the Trump visit and the deals that were done with oil companies and oil field services companies about manufacturing the facilities within Saudi Arabia. One of the things on the slide is the KSA Energy city, $4.4 billion investment. They're looking for that city, and that's about manufacturing things for use in the oil and gas industry. So instead of an oil field service company just importing things from the US or Europe, actually building these things within Saudi Arabia, creating jobs, adding, diversifying the economy. Although we talk about growing manufacturing in a country like Saudi Arabia, you need an end market for those products that you build. So it makes sense to build products that you can use in the oil and gas industry, because you already have an industry there that's spending a huge amount of money importing these products.
So we know that Aramco is going to spend $33 billion a year for the next 10 years. They've told us that. So if you're building a factory to produce oil and gas products, you've got $33 billion spend to tap into.
Yeah, it makes sense. They're already building this big maritime yard, Roscoe, building things for building
ships.
That's
the McDermott yard, is it? Or?
I think McDermott has an MOU to build their own kind of complex within that. So the sort of larger sort of mega project with some Korean companies as well. And it's all about building things to support the offshore sector. And we've seen Saudi investing in building sort of gas turbines with some of the big technology companies. So there's definitely a theme running through these announcements, and that is the in-kingdom total value program and building things, especially in the sort of eastern province of Saudi Arabia.
And this obviously comes under the general picture of Vision 2030 and the transformation of the Saudi Arabia economy from a state-led to a private sector-led diversified economy. Okay, thank you, Mark, for that. Andrew, if we can move to you. So you are the power and water editor for MEED, so your area of focus is on electricity generation and on water supply. In Vision 2030, which Mark has just talked about, the oil and gas sector, the different approach, one of the big things that's happened recently is the new renewable energy programme. 9.5 gigawatts of renewables to be installed by, is it 2030?
Yeah, so that 9.5 gigawatts by 2023, actually. So that'll be about 10% of the total, the forecasted total. By that, so that at the event coinciding with Trump's visit, Al-Fala did mention, we're still targeting 10% renewables by 2022.
So at the moment, if we can show the slide called Saudi Arabia's energy shift, that has a pie chart on it which shows the current breakdown of energy sources for Saudi's electricity sector, and currently renewables have zero. They don't feature on this. There's no renewables to speak of at the moment.
Yeah, there's a few smaller projects. Saudi Aramco has a solar rooftop project, which actually for rooftop projects big in Dhahran, but in terms of the total installed capacity in Saudi, it's very, very minuscule. So
okay. So 9.5 gigawatts by 2023, and currently there is a tender out for the first two projects on that programme.
Yeah, first project. So they had the pre-qualification for two. They've issued the tender documents for the solar 300 PV project at Sakaka. The 400 megawatt wind project, that's been delayed a little bit. Apparently, I think they're going to choose a different site for that one.
So they still want to do a wind project, but they're changing location.
I think because they've had to plan for the first one to be at Midjan. However, I think apparently there's discussions they were going to have a tourism development at Midjan. So they're not sure if they'll have access to as much land, so they're planning to use another location.
Okay.
But I think they're planning to issue tender documents for that by September.
And what size is that? Is it 700 megawatts or something?
It's 700 in total. The PV solar project's 300, the wind's 400.
Okay, and that's the first phase of the overall renewable energy programme. And tell me about the organisation, REPTO, the organisation that is responsible for delivering and managing the renewables programme. What is REPTO?
So, REPTO is in the Ministry of Energy and Industry. It's been created, so it's a Renewable Energy Project Development Office, and that's been created to oversee the development of renewables in the Kingdom. So I'm sure a lot of the viewers and readers will remember they created KCARE, King Abdullah City for Atomic Renewable Energy, in 2010. It launched a 54 gigawatt renewable energy programme, very ambitious, and it didn't end up moving ahead with any projects. So they've created REPTO under the Ministry of Energy and Industry, which itself was a new ministry created last year.
If I can just clarify, so the Energy Minister is Khaled Al-Fala. He's a career Aramco man. He was the Chief Executive of Aramco. He's moved up to take over from Ali Naimi as the Oil Minister.
Yeah.
As part of Vision 2030, we've got a drive to develop renewables and diversify Saudi Arabia's energy sources for electricity generation. And this new organisation, REPTO, has been created to manage that drive, and that sits under Khaled Al-Fala.
Yeah.
So an oil man is in charge of Saudi Arabia's renewables programme. Is he 100% committed to renewables? Does he believe in them?
Apparently so. I mean, when I was in Riyadh, everyone I was talking to said Al-Fala is really committed to renewables. I was speaking to some of the advisors on the first round of the programme this week, and they said he's quite hands-on.
Okay.
And he's interested to talk about that at the event.
So he's an engineer. Is he's into it from an engineering point of view, or is he a climate change believer?
Well, I think he's in terms of being an engineer, but also it's efficient and it'll reduce. It's cheaper now if you can get renewables online, and that's the thing. When the oil price dropped, a lot of people were worried that renewables projects would be cancelled. Oil's cheaper, we might as well burn it for power.
Yeah.
But that's actually when you should be trying to preserve it, if you can.
Yeah.
and get maximum value on the market rather than just using it domestically. So that's seems to be committed to it. And the creation of this, so it's energy industry and mining, or minerals, altogether. I think that's been welcomed, because the energies, the sectors do overlap.
Yeah.
And I think a coherent energy
There's that
policy.
high energy conversion requirement for, aluminium or phosphate.
Sure. So I think integrating renewables with oil and gas in its power sector will be.
And so the key thing, these are all going to be delivered as privately financed projects, so IPPs or IWPPs, but IPPs for renewable projects, so independent power projects. So the key thing is investors who believe in that they can make money out of a project, and they then raise the money and put the capital investment in. What sort of appetite have we seen? I mean, you say the first request for expressions of interest was issued in March for the solar project, 300 megawatts. What sort of interest did they get?
Well, they pre-qualified for the wind and solar, about 54 companies.
Okay.
So some of the
That's in total across both.
Total. So the exact split was about 28-24. Some of the same companies.
So that's a lot of interest.
Yeah, and apparently there was about 90 companies that entered pre-qualification entries.
And is that just because these companies are global players? They're going to enter for anything, or does it show a particular interest in Saudi Arabia? People have confidence in Saudi to deliver these projects.
Well, I think just due to the scale of the program, there's a thought we'll get in now, and it's long been thought that Saudi Arabia is the key for the renewable market taking off in the region. You need a supply chain of projects. And Saudi Arabia can provide that due to the size of the market, and they're looking at manufacturing industries there as well, producing parts. So I think there's a view that.
So does this we talked about the in-kingdom total value add program earlier, where there's this Aramco desire to double the contribution of local parts into projects. This is the same for renewables? Saudi wants to develop a manufacturing base to support the renewables program.
Sure. So in terms of renewables, they're looking at plants for PV, solar panels and other parts. But also in the power sector in general, there's turbine facilities there are being developed by Siemens and GE, manufacturing facilities. And I think another
Does this affect? So I think it was Siemens that were looking at building a turbine plant in Egypt, because Egypt has a big wind program.
Yeah.
And they're now talking about a turbine plant in Saudi. Does one affect the other, or will they do?
Well, in Egypt it was a rotor blade for wind projects, but in Saudi it's turbines, gas turbines for.
Oh, sorry, I misunderstood.
Yeah, but I think that's another key issue of the event last week was, as Mark said, you need an end market, but they're also looking at the wider region as a market, or even further afield. So if you can create, a robust manufacturing hub in Saudi Arabia, then you can sell parts to everywhere else in the Middle East or Asia, other markets. So that's the aim.
And what we have these two projects that have come out as the first part of the renewable energy program. One of them is being delayed whilst they look for a new location. What are the next projects to come out? Do we have a pipeline of renewable projects?
Well, they've got the first two announced. So 9.5 gigawatts 2023. By 2020, it's 3.45 gigawatts. Will be in three phases. 700 in the first. The second one, which is about 1,000 megawatts, that's due to start coming to the market in the fourth quarter of this year.
Okay.
I think there'll be a wind project as part of that. So the breakdown hasn't been released yet, but it'll be about
something in the fourth quarter, maybe
megawatts.
Similar, slightly larger volume than we saw in the first lot.
Yeah.
Okay, but we don't have detail. And Donald Trump, he's famously a climate change skeptic. Did that anything emerge in his trip to Saudi last week about the renewables or climate change?
Actually, no. I mean,
it's off the agenda.
Off the agenda. He didn't mention it. I think some of the deals signed definitely include renewable energy as part of it. And there's companies there like GE that signed $15 billion worth of deals. So
what were the GE deals? Do we know much detail?
The 15 billion, I'm not sure the exact breakdown, but that'll involve oil and gas contracts. I think it includes about 12 gigawatts of power generation as well. In terms of the exact projects, there wasn't a breakdown given. But I mean, GE
What about
are interested
nuclear?
in
So Saudi has
wind
this,
as well.
I think on your slide, is it 7 gigawatts of nuclear, 17 gigawatts of nuclear power planned by 2040.
Well, yeah.
GE does nuclear turbines, I think.
Sure. I mean,
turbines for nuclear plants.
Yeah, nuclear energy was mentioned in the 2030 vision. There was no target specified. That figures from what some ministers have said over the years. So I think the nuclear programme is still quite far off. However, earlier this year, when I was at the World Future Energy Summit, I was speaking to some of the guys working in the Saudi KSA that were going ahead with this. And they've got projects, I think the initial plant, just a 2-reactor plant, which have a capacity of about 2.8 gigawatts as an initial plant.
Have they started talking to anyone about reactors?
No, it's still very early. So I think they're still choosing a site for the first, which Al-Fala mentioned, that'll be about 2.8 gigawatts. They're also looking at smart reactors, which are small modular reactors which have capacity of about 100 megawatts each. So that's quite an innovative solution.
Remote locations in the desert for
so they signed an agreement, an MOU
production
with
plant
the Koreans
sites
for those. So that's what they're looking at. But also as part of the mining plans and 2030 vision, I mean, they've got uranium reserves as well. So I think that they are looking for a nuclear industry, but I think that might be a few years off.
Okay, now we have a few questions. If you want to get involved, we're talking about Saudi Arabia, so we can try and answer anything you would like to ask or take any of your comments on Saudi, but particularly we have Mark here to talk about oil and gas and petrochemicals in Saudi Arabia, and Andrew Roscoe here to talk about power, water, renewables and the utilities sector. And of course Andrew was with President Trump in Riyadh last week, and so if you want to know anything about US-Saudi relations, Andrew's the man to ask. We have a couple of questions here. Do we expect the new agreements, so I think this is the long-term agreements we're talking about with Aramco, and Aramco direction to pick the market up soon, or will that be held back until Saudi Arabia finalises the program management office that they're putting in place? So this discussion we had about the ongoing offshore long-term agreements and the expansion of that program, is that just going to continue unaffected by the non-oil sector developments?
I don't get the impression that it's related. I think we'll possibly know over the coming months how quickly they're putting these sort of tenders together.
Okay, so the creation, we have Bechtel, which has been appointed this National Programme Management Office, and that's about helping the different ministries plan and manage and coordinate their mega projects and other projects, each of them setting up their own project management office.
Yeah.
But from what you know, we think that actually the Aramco market is in its own track. It's not really affected by that that initiative.
As far as I know, I think it's something that we could look into, and if it does have an effect, obviously it's worth looking into. There are other large projects that are in that stage at Aramco as well. It's a sort of $5 billion gas processing project that's currently out to tender, so it does look like projects are still.
So we think the answer is no, it won't be affected, at least not directly. Okay, now we have another question here. Do you think that investment in the non-oil sector will have less volatility than investment in the oil sector? So by the non-oil sector, I guess we're talking about infrastructure, real estate, transport, utilities, and then the oil sector is obviously the oil and gas and the petrochemicals. So is the non-oil sector less volatile, less unpredictable than oil and gas?
I would say yes, it's less volatile because it's driven by population. So in terms of healthcare and education, facilities in the kingdom, which they need a lot of.
Mark's just said that this 33 billion a year from Aramco, it looks like it's roughly in the same ballpark as we've had for the past years, which would imply to me that the strategic spend is constant. And yet at the same time we've seen all these infrastructure projects put on hold. So
I think it depends over what time frame you're talking about as well.
Yeah.
I think the non-oil sector has been quite volatile over the last few years just because of that shock of the oil price dropping. But if you're looking at longer term trends, infrastructure does have to keep pace with the growth of the population.
Yeah, I mean, if you look at the power sector, it's driven by population, but also industry. So if there's a time where the oil price is lower, there's often less industrial projects launched, which means there's less activity, which means that can affect demand for power. So I mean, in terms of schools and hospitals, there's a big demand in Saudi Arabia. I think that the difference, which we should make clear though, is for a lot of the other sectors, it's going to be private investment. So Aramco's still going to be investing in a lot of its projects.
I think that's an important change, isn't it? That transition from direct spending by government to PPP and private investment.
The other sectors, so take power, the renewables, they reckon it's going to be $30 to $50 billion of investment. But that's not going to be government capex, that's going to be coming from the private sector. And it's going to be getting paid over a period of 25 years.
So in terms of volatility, the factors there then, I guess it's the fundamentals of supply and demand. If you're an investor, you want to know that demand's going to increase. I always find this an interesting question in the energy sector because the level of subsidisation of energy costs has been so great for so many years. Do we actually know what the demand trajectory is for energy? People haven't been encouraged to conserve energy, and fuel is free, and electricity is free or low cost, and water is free. So, if I'm an investor going to look at the Saudi market, do I know for certain that I'm going to have growth, 6% a year growth, or whatever the trajectory is?
Well, I think in terms of utilities market, you're going to have growth. They're looking to reduce growth, so they're planning, and they can do that by improving efficiency of power plants, but also improving efficiency on the supply side, but also on the demand side, reducing consumption, and that's through tariff reform primarily, which they're also looking at. So they're looking to improve efficiency, reduce consumption, but I think in terms of still population's still growing there.
Okay, so what we're saying,
and also if they want to diversify, you need more energy.
Yeah.
So manufacturing industry, you need power, and you need water for plants.
So what we're saying, I think, is the question is the non-oil sector more volatile than the oil sector? And we're saying that generally it should be less volatile because you have this consistent growth in population and the economic expansion. But in the past couple of years, we've seen exceptional circumstances which are part of this shift to the new way of doing things, the privatisation, and for that reason it's become a very painful sector, the non-oil sector, but oil's actually been okay.
It is also worth pointing out that the oil sector, if you include gas, with oil and gas, is that gas is very much in line with what Andrew was just talking about. Gas supply has to keep up with the requirements of the population and industry and everything else. And a lot of the focus that we're seeing in Aramco at the moment is on the gas side of things. So gas is very much used to feed the non-oil sector. So any consistency of growth in the non-oil sector will also have to be met with investments in gas infrastructure.
Okay, sorry, we've had a couple more questions coming in there, and now we're going to go back. Both are for you actually, Andrew. One is on the Repto question and one is on water. So which would you like to do first? Shall we do Repto first, because we've been talking about Repto. Now this is quite a challenging question, and so thank you for submitting it. If anyone else wants to submit questions, we have 5 to 10 minutes remaining on the broadcast, so please get your questions in. We will try our best to answer them. So Andrew, this viewer has attended a meeting with Repto recently. So this is the agency responsible for delivering renewable energy projects, and they found out that there was no government support or leverages to particularly incentivize this program. So there's no involvement in project share, government involvement in project share, no tax exemptions, no customs exemptions, and full responsibility sits with the investors. So it's like 100% risk going on to the investor. Is this the correct picture? Or do you think that they are looking for tariff prices near to the UAE projects? And do you think this is logical? So I guess what the questioner is asking, have they set it up right? Or what are people saying about the renewables program in terms of attracting private investment?
Yes, so that's The case is for these IPPs, there's going to be no government stake in the project company. Whereas in Dubai, for example, DEWA has a 51% stake. In Abu Dhabi, the government has a 40% stake. For the new and previous IPPs in Saudi Arabia, it's been similar. The renewable projects, the project company will have 100% ownership of it, which that can be seen as an attractive proposition. It's more risk, but also the opportunity to make more money.
In traditional, so the IWPP market in the Gulf and in Saudi Arabia especially has done very well over the past 10, 15 years. You've had government involvement through feedstock supplies, so a single supplier of your raw material and a single off-taker. Saudi Electricity Company takes your outputs, and so you've got agreements. That model is not being translated.
SEC is going to be the off-taker for these projects.
Right.
So the government's going to be the off-taker. I think in terms of the project ownership, I guess the advantage of having government ownership, it helps, when it comes to finance. So in Dubai, DEWA or ADWA in Abu Dhabi, SEC, they've got good credit reputations, big companies. And obviously they'll put some equity in as well, so that you've got more of the burden on it. It's a different way of doing it. But I think that in Saudi Arabia, that's just the way it's going. The SEC is a good example. They're going to privatise SEC.
So I guess with
sell
SEC,
off the existing generation companies.
Yeah.
So
the SEC is the market at the moment, isn't it? It's the owner, the operator, the regulator, etc. And therefore it can have a stake in the independent projects. But if SEC is unbundled and everything is privatised, it doesn't have a stake. It all goes to the private sector. So that's what we're talking about.
So that's so on that front, it's not surprising this is what they're doing. So I think that there's lots of opportunities there. Maybe more risk on the developers, but I think you've got to think that in terms of getting finance for these projects, a lot of the banks are interested still in Saudi Arabia. So
okay, and are they looking for tariff prices similar to? So in the UAE, we've seen world record levels of tariffs paid for renewables. Do we know if Saudi is looking to achieve those same levels, and is that possible? I don't know how the tariff works in terms of geography.
They'll be hoping to achieve low tariffs, but the thing with tariff for renewables, about, depending who you speak to, 35% more of the tariff is due to financing. It's financing costs.
Okay.
So again, in Dubai, you've got low tariffs because DEWA was a solid off-taker in terms of getting bank financing.
Okay, so if you don't have a sovereign
credit rating, Dubai's got a good credit rating, which Saudi Arabia does too. But I guess it'll just depend on the market at the time in terms of what financing is available, whether it can be quite as low.
Okay.
But I'm sure the prices will be competitive.
Okay,
if you look at the list of companies participating.
Okay,
sure
so that's a great question. Thank you very much for that question, and for all of the others that have come in. Please keep sending them. We have a couple more that have come in. Andrew, I'm going to stick with you for a moment before we have another one for you, Mark, in just a second. So, Andrew, what is the news regarding independent water projects in the coming days with SWCC or NWC? What do we know about water and wastewater independent projects?
Okay, well, I actually just wrote a story this morning.
Which you can see on MEED.com.
MEED.com. So this week they appointed advisors for the next two big IWPs, which Shikake and Yanbu.
So this is through
SWCC.
The National Water. This is through SWCC.
Yes, for desalination. So they're going to be major projects, combined capacity of over 800,000 cubic meters a day. So they've appointed Sumitomo Mitsui Banking, SMBC as the financial advisor, ILF Consulting as technical advisor, and DLA Piper as a legal advisor. That's just been
and
when will this week.
When will these projects? What's the status of those projects at the moment?
So they've just appointed advisors now, so they'll work on getting the tender ready. So I guess you'll be looking at issuing the tenders this year, maybe third, fourth quarter.
Okay, so perhaps into the fourth quarter.
I've got Ramadan coming up.
Okay, and then the summer as well, of course. And what about the National Water Company, NWC, on the wastewater side? Any news from them?
So, in the first part of the year, they issued consultancy tenders for Jeddah Airport 2, sewage treatment plant, which was tendered as an EPC in 2012. They're going ahead as a BOO project, Typh North, and a Waterfield project. As far as I'm aware, they still haven't awarded that. So NWC's had a reputation over the years for not being the most efficient. So they're still waiting for that to go forward. And I think, in terms of what you were asking earlier, is the money ready is the investment time going to happen now in Saudi Arabia? I think they need to start. You're getting a lot of plans organised, but I think now they need to appoint consultants and get the tenders out to the market.
So in April, we learned, I think you reported on MEED.com about the National Centre for Privatisation. So this is a new organisation that's going to, part of Vision 2030 and the National Transformation Programme, it's going to deliver the privatisation. These IPPs, IWPPs, IWPs, all these independent power and water projects, are they going through that National Centre for Privatisation? Is that, or do they go directly through?
I think because the Kingdom's got quite an established record in IPPs and IWPPs, although it moved away from the model when the oil price was higher. I think that's separate. I think the NCP is more focused on things like education and healthcare.
Okay.
I mean, these are harder projects to do.
So the utility sector has been doing it for some time and so can carry on.
There's an established track record there.
And is your sense that we've had this 18 months of fiscal consolidation or austerity or cutbacks, whatever we call it, and that's included restructurings within these ministries. Is your sense now that we have a backlog of projects that we can genuinely expect to see brought to the market before the end of 2017?
Well, I think you can split it in Saudi Arabia. You know, getting the sentiment from people in Riyadh at the conference last week. Renewables, you know, they're very committed to making good progress with the first projects. Very transparent. Conventional power projects, they're being held up. There's two reasons. One, I don't think the demand's been as great as they initially thought. But also, it was the SEC privatisation, which is going to have a big impact. I think that until they've got that sorted, that's slowing projects.
What's the news on the privatisation?
Well, as far as I'm aware, they're still working on identifying the first generation company. So they're going to split the generating assets in the Kingdom into 4. That's the plan. Be about 20 gigawatts each. The Kingdom's got a capacity of 81 gigawatts, so still identifying the first one. Apparently it's been delayed. Apparently there's some resistance from within SEC.
That's not a surprise, is it?
Understandable. I mean, it's been a mainly government company. 80% owned since it was listed for a long time. SWCC is completely government owned. These companies have been run under the state's control for a long time.
So we saw oil prices slightly recover in recover quite a lot in 2016, and they've been level through 2017. But production output is down, so the Kingdom's still under pressure fiscally. Do you think this resistance to the privatisation of the electricity sector is significant enough to derail the whole plan, or what do you hear?
No, I don't think so. I think the leadership, which is coming from Mohammed bin Salman, that the message has been made quite clearly. You need to privatise. You need to get the private sector in. So.
Okay, so we've got 1 minute to go. Mark, I thought this was an Aramco question. It's not. It's a question about construction that mentions Aramco.
Okay.
For that reason, I'm going to ask you about it, even though it's not your area of expertise. But how will the Aramco deals affect the construction market? So I think the construction market here, it's referring to all construction activity in Saudi Arabia. So stuff on the oil and gas side, but also transport, railways, real estate. So does this Aramco activity affect the construction market? And then what can engineering consultants, so I guess engineering consultants would be the multidisciplinary consultants, the Atkins and things, through to the specialist, chemical engineering feed consultants as well. So maybe that's an easier one spot for you, where you've got these long-term agreements and the investment programme. You talked about 5 contractors, EPC contractors.
Yeah.
Where do the consultants fit into that picture?
Well, there have been other deals awarded to consultants in the sort of planning stage of.
So they have
Aramco.
long-term agreements as well?
Yeah,
or?
there's a separate program for agreements that engineering consultants have been picking up over the last 6 months or so. That's to do with the design and planning of specific oil projects. That's not just offshore, but also just across onshore oil fields and.
So again, it's part of their supply chain management structure. They have they pre-qualify companies of a certain quality and scale.
Yeah, but Aramco's always done this. A lot of these recent deals are more just like rollovers of previous contracts that were already in place.
Okay, and so if you are an engineering consultant, you want to get involved, what do? You go to Aramco, find out about their supply chain management structures and pre-qualify, and then there's a long-term agreement schedule, a bit like the one we talked about, and you can get onto that. Okay, that brings us to the end of today's broadcast. Thank you very much for joining us for today. Thank you to Mark and Andrew for your time. Some very good questions and answers in the programme. The slides are available on screen now on the resources tab that is in front of you. We can also email them to you if you have difficulty accessing them through the slides. You can contact me, Andrew or Mark, and we can email the slides to you directly. If you would like to know more about this report, so a lot of the content that we've just talked about is contained in this all of the content is in this Saudi Arabia Delivering Vision 2030. And we'll be delighted to tell you about this. It's a very good update on the Saudi market. And as both Andrew and Mark have said, there's a lot of new information appearing every day on MEED.com that I do encourage you to use MEED.com to keep on top of these things. Thank you very much for joining us. Next week we have another MEED Live broadcast, and we're going to be looking at is it next week, the renewables programme, or maybe, I think it's next week. So Andrew, you're working on a report on the renewables sector, and that is due to be out in the next 7 days.
Yep.
So join us for MEED Live next week to look at the GCC and MENA region renewables market. Thank you very much. Excellent. Well done. Well done, Mark. Good show. What do you think?
Yeah.
Yeah.